morning, everybody. We're all really excited to be back on stage here at this RavenPack Research Symposium in London. I'm also personally very excited about all the great talks or interesting talks that we will see on stage throughout the day. As part of my presentation, I will talk about thematic boosting of investment strategies using language AI. I believe it gives a pretty good overview of some of the work that we have done within the RavenPack data science team throughout the year. If we look at language AI, it has provided great contributions to the continued sophistication of the financial alpha landscape over the last decade. If you look at, it has sort of allowed investors to move beyond more traditional data points or data sets to consume more textual content that was previously unavailable. It allows us to consume not only news content and press releases, but also filings, transcripts, analyst reports, amongst many other interesting data sets. And language AI has already proven to provide a lot of value to investors and provide value in applications that go well beyond gauging a simple sentiment. The most sort of powerful trading indicators account for context and can help investors get a better sense for the half-life of sentiment signals. And I tend to say that sentiment can only give you two of the three dimensions that you as investors are really interested in. One is direction, one is strength or impact, and the last dimension is about how quickly does information get incorporated in price. There you go. That's also why we see our RavenPack's event detection capabilities as being one of our unique selling points, being able to organize all of our data within these elaborate taxonomies. We cover anything from business-related to economic-related news, political, societal, and environmental news. And having this taxonomy available allows you to filter in ways such that you can learn something about not just past events, but also present and future events. You can work with sentiments associated with stock prices going up or down yesterday, or more importantly perhaps, information about future earnings guidance. But I think one of the things that is really powerful about having these taxonomies available, these more, can you say, generic or general taxonomies, is that you can curate them and use them to build your own sort of more targeted view on how you see the world. You can consider them as sort of event building blocks, right? And that can allow you to create stronger signals and something more targeted to your particular use case. So today I will talk about three potential applications where we try to curate different taxonomies to address three different thematic concepts. I will talk about earnings intelligence. I will talk about building controversy scoring frameworks, and also I will cover a use case tracking economic activity. If we kick it off with earnings intelligence, tracking company earnings is one of those core signals that any fundamental investor is interested in, whether you are quantitative or discretionary. And there are many different data sets that exist that can give you some insight into company performance. But if you sort of stick to more traditional sources, you have to sort of fall into the trap of only getting sort of a quarterly data point at best. And perhaps you can look at analyst reports or ratings and so on to get more of a continuous read. However, if you look into alternative data, you have a much more frequent data point available that can give you an insight into how companies are doing. And it's already something that has proven valuable to investors. So as part of our earnings intelligence work, we look at four different data sets in sort of a Mosaic type approach. We look at real-time news and press releases, which give you sort of the first possible data point you can get around the actual announcements. It often appears in a press release first. But you can also track any company or analyst guidance that happens throughout the year. We then look at earnings call transcripts to not only capture the hard but also the soft information that is being conveyed throughout a conference call. We then look at insider transactions, not just to track what the executives are saying about the performance, but also what they're doing themselves. Are they buying or selling stocks within their own companies, let's say over the quarter leading up to the earnings call? And then finally, we also look at earnings date changes, whether they're advancing or delaying the earnings announcement. Often, delays are associated with something negative. So that could be that they might be challenged to have a sign-off from the board, the directors, or the accountants before they can make the official announcement. So we'll look into that as well. So in order to build our earnings sentiment signal, we use the RavenPack Event Taxonomy. We curated and sort of select all of the components that are relevant for earnings-related sentiment. And that allows us to split up our signal into more sort of fact-based information related to the announcement itself, but we're also able to look specifically at guidance sentiment. And one of the benefits of being able to split within the taxonomy and make that distinction is that the market reaction could very well be different. So we want to treat the two dimensions differently. Not just in terms of potential signal decay, but also how we construct our signals. There's always a trade-off when you work with this type of content about signal strength and volume, how you're going to set your filters. And there's definitely a lot more announcement data available compared to guidance data, so it may be you want to be a little more relaxed in terms of capturing more data points on the guidance side that you want to on the announcement side. So if we take a look at performance, I think what's interesting when you look at both transcripts and news content, while earnings news and earnings call transcripts capture sort of earnings-related information, the market behaves very differently to these type of signals. So it's very clear to us in our research that the news is the stronger signal of the two, but mostly in the short term. On the other hand, you see that transcripts tends to be the better longer term or midterm type signal. So if you go with holding periods of more than a month, you'll see, and of course that depends on the trading universe, whether you are in US mid and large caps or small caps or you go more international, but typically it's sort of like in that range at 1 month plus, you see that transcripts is the strongest standalone signal. However, if you go within a month, the combination of both news and sentiment has performed, news and transcripts have performed even better. We also tried to fold in insider transactions information into this signal, and one of the things that we find is that it interacts particularly well with transcript sentiment. So if we basically look at not just what the corporate executives are saying, but also what they're doing, we're able to enhance the signal further. So if you rank high in earnings call sentiment, and you have seen net insider buying in the quarter leading up to the call, we sort of give it a little extra boost, so you go a little more long, so you overweight those names. If you rank low on earnings call sentiment in the cross section, and you have seen net selling in the quarter leading up to the earnings call, we underweight more aggressively as well, or sort of go more short. And by doing that, we are able to boost performance even further. Here I've shown the performance of the US top 1,000. It's more striking in terms of outperformance when you go to sort of the small cap space, and also as you go more international. But even in the US top 1,000 universe, we can see a significant improvement, especially sort of on the longer term horizons. The last thing that we fold into our earnings intelligence signal is the earnings date change signal. We do something similar here, so in a sense that if you advance your earnings date, that's typically a good sign, and we put a little more weight to those names. If you delay, it's seen as a bad sign, as I was making an example a little earlier. We sort of go more short as well to get exposure from the earnings dates signals. And again, we can see that you get a quite consistent boost across all investment horizons when making this sort of adjustment, and we see about a 15% improvement to information ratio. I will say this signal is probably more relevant in a US top 1,000 universe due to coverage. One of the things that was also interesting when evaluating these type of strategies is that over the last couple of years, the last couple of years have been a little tough for many investors. But if you look at earnings call transcript sentiment and earnings date signals, they have been particularly strong in the last couple of years, and especially for slower moving strategies. But if we are to combine all of these different signals together into an overall strategy, this is what we get. So the red line is sort of a high turnover strategy where we only try to make one day ahead predictions. And we are able to achieve information ratios of close to 2 with annualized returns of 15% pre-transaction costs. But as I mentioned, this is a high turnover strategy. So you may want to smooth it to slow it down. And if you go to the yellow line here, that's when we have smoothed it to the extent so you sort of have a 1-month holding period on average, and you're still able to achieve information ratio of about 1.6 with annualized returns of about 5%. I think what's also particularly interesting is that you actually don't load up on traditional factors that much over that horizon. You have relatively modest correlation to traditional risk factors. In fact, we have also done research where we have used this earnings intelligence signal as a tilt on top of traditional factors, sort of overweighting or underweighting the long and short side of a trade for momentum, value, and so on. And we were able to improve on every single of those traditional factors, even with a monthly rebalancing frequency. News content can also be a very powerful source of information when tracking real-time company controversy globally. And it provides a way of tracking media attention of whenever companies or executives get themselves into trouble. Again, the starting point is really for us to curate a taxonomy that is more meaningful for us when we want to capture controversy. We look at the RavenPack broad event taxonomy, and we curate 171 event categories at the most granular level that are directly associated with controversy. And we organize them in a multi-layer approach. So we have at the pillar level 5 dimensions: environment, social, governance, legal issues, and industrial accidents. And then, of course, you can work at different level within that taxonomy as you see fit. We have sort of spun off legal issues as its own sort of pillar because it often complements the other dimensions. So you may see some fraud or scandal or something like that in one dimension, or you could see, let's say, an oil spill, and that could lead to some litigation issues as a follow-up. And it's quite neat to be able to track both dimensions independently. So using this taxonomy, we build a set of indicators bottom-up at different levels of granularity within that sort of whole framework. And the way that we construct our controversy score is that we look for focus on 5 dimensions. We look at the amount of volume of news that fall into a particular part of the taxonomy, into a particular group, whether that is being the E, the S, or the G, or at a deeper level. We look at the number of sources, different sources that picks it up across the 40,000 plus sources that we track. We also look at the number of languages that picks it up. So if something is being picked up in multiple languages, it's a pretty good indication that something really important is taking place that caught international attention. We also look at the source rank of the sources. So is it picked up by the Dow Jones of the world, or is it first picked up in some small block somewhere? And then finally, we also look at whether the controversy is able to carry a headline in the news, or whether you have to dig it out deeper in a news article. We sort of loosely refer to this controversy score as the Richter scale of controversy because it sort of moves in a similar range. We do like a log volume type approach, and a score of 8 has historically been a very, very extreme value. So if we look at an example, here is the BP oil spill in the Mexican Gulf area or region. And the reason for why I picked this particular example is because this is the one that has had the most extreme score throughout the 20-plus year archive. And as you can see here, back in 2010, when you saw the explosion on the Deepwater Horizon platform, you saw 3 dimensions spiking for BP. You saw industrial accidents spiking, that's the red one. You saw legal issues spiking, that's the green one. And then the one that spiked the most and that nearly hit an 8 was the pollution dimension. Again, in 2012, BP had issues or problems, again, with the Cherry Point refinery that also had an accident. It caught fire caused by an explosion. You see there's a jump in the industrial accidents part, but because they already were high in the controversy dimension on legal issues and pollutions, you see smaller reaction there. There are obviously many different ways that you can apply a controversy score from a trading perspective. We have tried to look at it from an exclusion point of view. Here we look at the Eurostoxx 600, and we look at different levels of what we refer to as controversy momentum, which is really some adjusted change score in the controversy score. And then, of course, depending on how aggressive you want to filter, you are filtering more or less of your cross-section out of that index. And we can see that by doing that, you're able to not only achieve some boost to returns, but also an improvement to the overall information ratio. The graph here shows the excess return to the index, depending on the different threshold levels that you apply. We have also seen very interesting applications within corporate credit. If you filter on, can you say, the most extreme controversial names, it almost acts as an insurance premium and really protects the downside extremely well, where it sort of performs more with the benchmark during normal times. The last theme that I will cover is related to tracking economic activity. And as part of some of our research, we have tried to take more of a novel approach. You can, of course, measure economic activity sentiment through news, but we tried to look at transcripts. So saying, could we get a sense for what the economic activity is of the, let's say, the US economy based on what corporate executives are saying as part of their earnings call. So basically how they are seeing it on the ground. And again, in order to do that, we utilized the RavenPack Event Taxonomy to look, because we not only look at the events around companies and transcripts, we also look at any mentions of a place or an organization or whatever it might be across the 12 million entities that we track. And we also look for particular events that are more macro related. So it could be if an executive talks about our margins have been under pressure due to a slowdown of the US economy in the previous quarter. However, we expect second half of 2023 to look a lot stronger as we believe in a comeback for the US economy. Whenever they make these kind of references, we're able to pick it up and then filter on those events using our sort of curated set of building blocks that we would like to associate to economic activity. And we sort of loosely refer to our transcript economic sentiment indicator as our Tessie Score. Using this indicator, again, I mean, there are many different ways that you can apply this indicator to different strategies. We have tried to apply it for asset class rotation in our research. We define or use this indicator to define 4 different regimes. We have an expansion and a recovery theme or regime as more positive regimes versus slowdown and contraction as more negative themes. I think here we have plotted it in black line what the behavior of the Tessie indicator looks like, and we have plotted it against the US GDP preliminary release. And what's quite interesting is to see that it actually leads the official release over time. It generally leads it. And what's also interesting is that it actually captured both the GDP recovery observed during 2021 and also sort of going into 2022. But it has also started signaling a slowdown already in May 2022 and has more recently entered into contraction phase, which obviously isn't that great. And in fact, you haven't seen its low levels before since sort of the financial crisis back in 2008. So in terms of trying to turn that into an asset class rotation strategy, we applied different sort of rules associated with the 4 regimes that we detect. So we have an extreme or full rotation strategy where we are either in bonds or in equities 100%, depending on whether you're generally in a positive or a negative regime. And then we have two versions that are a little more conservative. We call it gradual rotation, where if you're on sort of more on the expansion side, you sort of go 60% equity and 40 bonds. And if you're on the slowdown side, you do the opposite, so 60 bonds and 40 equities. And then we have a third version, which is sort of you always stay 50-50, or you go extreme when you hit recovery or contraction mode. So with these different strategies, of course, some of them will be correlated more than others. We are able to beat all our different benchmarks that we have defined here. So we have, of course, equities only. You have bonds only, and then you have static 50-50 and static 60-40. And you're able to, with any of those strategies, to outperform. In fact, we get Sharpe ratios of about 1. We have even seen, as part of our research, that these types of strategies outperform a rotation strategy using manufacturing PMI, which is also known as one of those faster sort of indicators that you could use, but these type of sentiment signals are even stronger than those. If you were, of course, we have been hurt a little bit this year in these strategies because it's a long-only strategy, and we've been allocating to two asset classes that have not done particularly well. But if you were cutting the strategy, let's say at the end of 2021, the information ratio would have been, or Sharpe ratio would have been 1.2 plus. So in terms of 3 points that I would like you to take away from my talk today, well, first of all, trading thematically has some key benefits in signal construction, both in terms of how you should normalize your scores, in how to filter and how to model potential half-lives. The RavenPack taxonomy offers a powerful set of building blocks that you can use to curate and derive targeted taxonomies that really sort of go into the gist of how you look at the world and the exact problem that you're trying to solve. And then trading thematically is applicable across multiple asset classes, trading horizons, and both for alpha and risk applications.